Hello, traders. Gary Wagner here. Approximately 1:20 in Honolulu, 7:20 in New York on Thursday, 28th day of October, 2021. And this is the daily report for gold and silver. Alarming news today with the GDP numbers coming in under the forecast of a 2.8% growth. That is tepid at best, alarming, to be honest with you. I believe that, coupled with higher inflation, will propel gold to much higher pricing. We'll talk about that in detail during our chart section. Gold did close higher today, with the most active December contract gaining $1.80 and closing above $1,800 per ounce, the second time this week and the first time in about 6 weeks. But I believe that it was the tepid GDP report that was a part of that, and that will have long-standing repercussions. We'll talk about that when we look at some charts. Also, dollar weakness definitely contributed, with the dollar going down by about 0.5% at 93.33. However, silver continues on its road to lower pricing, $24.12.5. It's down almost 7 cents on the day, and we'll address that when we pull up some silver charts. Gold is open and trading overseas, currently fixed at 1801.60. Even though today's advance was moderate or tepid almost at best, I believe that there is the makings for much higher gold. But to get there, we're going to have to cover two obstacles. The first one is going to be, I believe, the first level of resistance gold will encounter as long as we see it continue to stay above 1,800 on a technical basis, and that is approximately $1,836. You can see that historically, we have seen over July and into August, this being a point of resistance. That would be right here, as well as this top that came in September. And that's what makes that an important level to watch. But above that price point, and this is what I find interesting, there isn't really any major resistance till this high at $1,920. Now, I do believe that if we break above 1836, we could see gold challenge 1900. But first, let's focus upon gold breaking and closing above $1,836. We're looking at a Henkin Ashi, or Japanese average chart of gold futures. And although we did see a price decline as witnessed by this red candle here, today's action did have upper and lower wicks. But as we go into tomorrow's action, and that's this candle forming here, as long as it does not trade below the price point that is the midpoint of today's trading range, we will see an absence of wick, and I believe will signal that the market is headed higher. That's on a technical basis. On a fundamental basis, with the FOMC meeting scheduled to begin next week, concluding on Wednesday, I cannot anticipate the Fed taking on a more hawkish stance, and I believe it's highly likely that they will back off of some of the pledges that they made, such as the recent addition of either 1 or 2 interest rate hikes next year. If that is the outcome of next week's FOMC meeting, I would expect gold to fly and have a strong breakout to the upside. This next chart we are looking at is a 3-line break chart, and this type of chart ignores the element of time. Rather, you get a new candle when warranted, which is when the closing price exceeds the high or the low of the 2 prior lines. We do have a new candle that has occurred. It is green. It is forecasting higher pricing. We did send out a trade recommendation today advising our clients to trade GLD to initiate long positions. We will detail entry and stop prices in the proper action section on today's member page. Lastly, I do want to take a look at silver. Although on a technical basis, we saw the 21-day cross above the longer-term 50-day moving average, the fact that it still is trading below what I believe is a key level of resistance at 24.27. I have not signaled a recommendation to initiate a long position. As I've said over the last 3 days, in order to do that, we effectively want to see a close above this price point. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.